We are now joined by Mr. A. Balasubramanian, CEO, Aditya Birla Sun Life AMC. Good morning, Bala. Thanks for joining us.
Good morning. Thank you.
Yeah, it doesn't seem to be a very happy morning. There is a global crash.
Yeah, true. I think it is though of course the US markets have been behaving well for the last many number of months and years.
Yeah.
The interest rates rising as well as the oil price movement that we have seen recently, is also beginning to hurt the US economy as well. I think yesterday's crash in US so is long awaited, more from the point of view of giving traction. Definitely, of course, Indian market corrected a little ahead of time for its own many reasons, right from the issues related to the LFS and in general the oil price impact on the currency, and finally the global market also is now correcting on the back of that.
So, Bala, that brings me to this question of 45,000 crore lifeline, if I can call it so, from SBI. Do you think that the short-term liquidity problem in the Indian financial markets is behind?
Yes, to some extent, I think there will be an improvement in the overall liquidity in the system. One series of steps have been taken by both the Reserve Bank of India, the Government of India, and the banks themselves in providing liquidity. That is a lifeline for the general financial market. The steps that are taken by RBI is, of course, through continuous OMO operations, inject liquidity in the system, which RBI has been doing it despite the currency movements have been pretty volatile, which essentially means they want to ensure that liquidity in the system actually improves as the day progresses. At the same time, there is 40,000 crores of buyback of securitized debt from the NBFC space, especially the retail NBFC space. So it is a good move from the State Bank of India to provide the liquidity to the non-bank financial services and HFCs, housing finance companies, to provide the needed liquidity. Again, it's a sale of assets, is the take away the assets, which is another good way of financing. In this process, there is a dual benefit. When the seller of the bond, of course, gets the liquidity, seller of the securities gets the liquidity. At the same time, State Bank of India also can deploy the surplus money in the form of lending. Their lending growth also picks up. Right. It's a win-win for both of them. I'm also assuming a similar move will be taken by the rest of the banks as well. Those who have been struggling to lend money on their own, at the same time buying of assets could potentially help them increase their the loan to deposit ratio.
Right. Bala, do you think, is there redemption pressure in liquid and short-term funds, and do you think this SBI Lifeline will indirectly help mutual fund industry as well?
As such, there has not been a redemption pressure per se. I think it's more about the fear factors, a little bit of confidence which is lacking when there is a volatility in the perception of the credit of most of the companies, and there is also perception that liquidity is going to dry up. Therefore, we could see somewhat of redemptions. Those redemptions were driven by the fear of mark-to-market volatility. With this SBI assuring that they will provide liquidity to the extent of about 45,000 crores through buyback of securitized debt, is actually going to has improved the sentiment to a large extent, and as more and more players do, I think will only get improved. Therefore, the redemption fear, I think more of the actual redemptions was very small, but the fear of redemptions coming in is pretty high.
Right.
And that's something which is, in my view, has mellowed down a bit.
Right. Bala, one heartening point to note in last month's data was that equity funds, pure equity funds, continue to attract inflows. That's the underlying trend if we move away from the headline. Do you think that says a lot in supporting the equity markets?
Sure. I think as is known fact, the last 3-4 years, mutual funds have been the primary driver of equity growth in the country. Also provide the necessary stability to the Indian equity market in the last 2-3 years. That trend continues. The overall SIP flows trend continues. The average inflows per month through the SIPs comes close to about 7,500 to 7,800 crores. And what is lacking probably is the lump sum, which doesn't matter. But as long as we are able to get structural inflows in the form of an SIP continuously, the mutual fund should receive on average 7,000 to 8,000 crores kind of flows every month. And definitely it helps the MF industries as the market falls. Definitely it helps the MF industries to buy at every fall. At the same time, whatever the existing cash which each mutual fund would be having, on an average 4 to 5% of the overall portfolio, should also help in providing the necessary, I'll not say flip, but at least buy into companies which are worthwhile buying from the longer term perspective.
Right. So that's a very important observation. Till yesterday's rally suggested that the Indian markets were in an oversold zone. And today, after the market crash, global crash, do you think that Indian markets will fall and then stabilize? What's your view?
Indian market fall should be, I think, should be restricted given the fact that India fell a little ahead of time, and India also fell due to the oil price movement. With this global crash, assuming a scenario that the oil prices.
Bala, I'm going to ask you a question that a lot of retail investors currently seem concerned about.
If you are forming a bottom.
Right. Bala, I have a question for you regarding what a retail investor should do. If one has entered the market, which I know a lot of people went out and bought mutual funds and the Nifty was at 8,500 in about 3 years ago. Today when the Nifty is at 10,300, most portfolios are down 10 to 12%, and most people are complaining that they have to pay an expense ratio of 2.5% from their, of course, the initially invested capital. Now, help me understand this. If somebody had just gone out and bought an index fund, they have still made some more money than buying a mutual fund. How do you justify this to your clients? Because these are questions that come to us, and we really don't have much to say to these people.
So I think one has to look at the whole thing from an angle of long term. I think we have seen this kind of fall every now and then. The last 25 years, we have seen 4 such fall. And 4 such fall definitely creates doubt in the mind of people. Am I in the right investment? Am I making the right investment in the right fund? Am I actually investing for real long-term benefit? And if you look back and see how the markets have behaved post every fall, the significant benefit has gone to the investors who have stayed with the fund for long term. Those who have remained a bit volatile during this period, little indecisive of what I should do, definitely they would have incurred the loss and then they would have moved out to some other asset class. Though that other asset class would not have performed as good as what you would have thought, but I think the satisfaction would have been different, saying my money is invested in FDs and other things. See, the mutual funds do go through this kind of pain period. Therefore, the suggestion always is to look at clear long term. The long term can be assessed about 10, 15, 20 years. Nobody should come in the market for 1 or 2 years period. Having said that, the people who came in the last 1.5 years, especially through the index fund, they benefited more than the benefit they would have got in the actively managed closed-end funds, open-end funds, sorry. One should remember the fact that Indian market is not driven by 30 stocks or 50 stocks, though they contribute about 80% of the market cap. But Indian market provides scores of companies spreading over about 3,000 companies. So therefore, the money managers to look for opportunities in this space and provide the necessary alpha in the portfolio over the longer term by finding multi-bagger ideas, I think will remain constant. Right. Therefore, one has to stay patient and one has to probably keep accumulating equity through an SIP route. That's the best way of investing. And as long as you keep this discipline, and I'm sure the benefit will come to the long term.
Right. Patience space, SIP investment is a good option for longer term, I think, but the near term, in a few minutes, when the markets open, you will have a different story, Samina.
It is a rough start that we're looking at. 10,200 is what we're eyeing in early trade. Bulls will try very hard to defend those levels. But remember, yesterday's rally was